making that long-awaited ETF a lot more likely. We're very close right now. Joining us now, someone's very much got a dog in that fight. ARK Invest CEO Cathie Wood. Cathie, you're one of 9 applicants for a spot Bitcoin ETF. It looks like the SEC is going to be forced to approve a spot Bitcoin ETF. What, if any, communications have you had with the SEC about your application? Where are we in this whole thing?
Well, it was publicized and disclosed, I think it was last week, that we had responded to the SEC's request for information around our Bitcoin filing, and we responded. And that's basically all we can say. I think many people think the fact that the SEC chose to ask questions is a change in behavior. And therefore, I do think hopes are rising that a number of Bitcoin ETFs will be approved.
Yeah, my understanding is the court now is going to issue a mandate about how to enforce their decision here to the SEC, and their SEC is going to basically follow that mandate. Everybody is assuming at this point that they'll probably approve most of the Bitcoin ETFs by the end of the year. Is that's a reasonable assumption at this point? They lost the court case. They chose not to appeal it at this point.
Right. And I do believe maybe the reason they're saying by the end of the year, early next year, I know our final deadline on this filing is January 10th. And so, and I think we're first in line. But as you say, a number of Bitcoin ETFs could be approved at the same time.
Now, your flagship ARK Innovation Fund's up 20% this year. You're outperforming the S&P, but you've had significant outflows this year. Can you talk about that? You know, you're outperforming, and yet you're having outflows. Tell us a little bit about what impact, for example, higher rates are having on your holdings this year. That seems to be a major issue.
Well, I think there are a couple of things going on. If you'll remember, in late 20 and early 21, the flows were enormous into our funds, and you know, I was uncomfortable at the time because we thought there was a lot of momentum chasing going on, and we said at that time, keep some powder dry. Little did we know how big the correction would be. This is sort of the flip side of that. We're feeling much more comfortable right now. But we did have, through July, a very significant rally. I do think there's been some profit taking there. And I do think, as you say, interest rates, rising rates have concerned a lot of people. There's been a shift into cash. And we've seen very recently a shift into bonds. And interestingly, the flows into bonds would suggest that we should not be far behind, because if bonds are going to rally, and we think they will at some point here, as inflation continues to come down, as the economy continues to go through rolling recessions of sorts, we think that the backdrop will be right for a resurgence in growth stocks generally, and in particular, long-duration innovation growth assets like ours.
My colleague Scott's got a question here. Scott?
All right.
Hi, Cathie. Great to have you back on the Halftime Report. So given what you just said, do you not believe in higher for longer?
I don't, and we don't, I should say. If we're paying attention to company earnings, and some of these our companies we're exposed to, others not, you'll see at both the high end and the low end of the consumer spectrum in terms of price points. You've got Domino's saying, hey, it's really weak out there, we've got to do more promotional activity. And you've got LVMH, same thing. Both of those happened last week. We're paying attention to company reports, and I understand the economic statistics are volatile and showing strength and then weakness. We're paying attention to our companies, and it does seem like the consumer is starting to give way here.
Yeah, interesting. Let me ask you about a specific stock that you sold, and that's NVIDIA. Do you regret selling it? You called it, quote, really expensive. I will note that the forward PE of NVIDIA is literally half of Tesla's forward PE. So how can NVIDIA be really expensive with Tesla not being so? And do you regret selling it?
We own it in our specialized funds. We've taken it down everywhere. And this is portfolio management. We see NVIDIA. You might say it is less expensive than Tesla. We think the upside surprises on Tesla during the next 5 years, and remember we have a 5-year investment time horizon, are going to be substantially more than NVIDIA's, mostly because most analysts do not believe that autonomous as a taxi platform for Tesla is going to be a part of the story. We disagree. And with that, we see incredible revenue and margin expansion. NVIDIA's margins are already quite high, having entered the 70s, the gross margins. Tesla's are in the 20s, and we think they will scale into the 60s and 70s as autonomous takes off. So Tesla, we believe, is the biggest AI project, or autonomous driving is the biggest AI project in the world. NVIDIA has been critical to providing the infrastructure to enable this and so many other things to happen. All praises to NVIDIA. We think that a lot of people understand how important NVIDIA is in this ecosystem, and they do not understand how much each dollar of hardware spent is going to pull software through. We think it's on the order of 20 times. So we think NVIDIA is going to be a good stock. We think the stocks in our portfolio, and we've written a paper on artificial intelligence. It's titled Investing in Artificial Intelligence, Where Will Equity Values Surface? You can read that on arc-funds.com and see how we're a really good diversification into this AI world. Many think that the winners are going to be the megatech companies who have had such strong performance over the years. We are not sure. We are not sure. GBTC could be the best thing that ever happened to Google, and that it lit a fire under Google to get its own AI into the market more profoundly. Or it could be the worst thing in that it's going to lose its advertising franchise if we're all just on ChatGPT looking for our answers.
All right, Kathy, thank you very much. We've got to have much more with Kathy Wood coming up on ETF Edge at 1:10 p.m. Eastern Time. Now, Kathy's going to talk more about Bitcoin and where we're at on that. She's going to talk about her concentrated tech investment picks, including more on AI and her new foray into European investor. We're going to hear all about her new purchases of a big European company. She'll be joined by Tom Lydon, Vice Chairman of VettaFi. That's etfedge.cnbc.com. Scott, back to you.